there was a big difference between what the optimal path for the company to have taken and what the optimal path for the network to have taken would have been. And the simplest example of that would have been, we would have generated $1 billion in revenue if we were just the only hotspot seller.
Does the Helium entity itself start to wrap its own tokens, and like Nova Labs, does it go public and then use its own ability to issue debt or equity to acquire more Helium tokens? Is it a separate entity that does this?
The coordination undertaking that DePIN allows you to do that, I mean, you best believe if you're at Google Maps, they're looking at that and saying, wow, like it's very powerful.
The value proposition is not crypto. It's a value proposition is like, here's a product that you want, and it's uniquely enabled by crypto to give you something that you couldn't get anywhere else. We're trying to build a real business that we don't have to sell tokens all the time or really ever to generate cash flow. You get the flexibility to do that when you're trying to build a real thing that doesn't just depend on people buying your token.
"17 minutes before the godfather of DePIN joins, and we can talk all about Helium," which I feel like is probably the most interesting piece of the puzzle that we wanted to discuss today. But yeah, before we jump into it, guys, how's everything? Where in the world are you, Santi?
I'm back home. I just came back from Paris. I was on a DePIN roundtable. This was a proof of talk, pretty high quality, high density. The panel was Austin Federa from 00. Obviously, he's cooking. We should have him on. He just explains it so crisp. Like, talk about like something that most people don't appreciate, which is like the internet was not designed to be monetizable. There's like no priority fees or no priority lanes in the internet. And like, it's one of those things where it's like he just drops truth bombs. And I was like sitting there in the panel and like taking notes, mental notes. And then there was like two other folks, the founder of Peak, this like DePIN layer one. So I don't know if you guys have an opinion on that. I'd heard about him obviously through a couple of folks, and then there was like this other lady. There was like actually related to what you're doing, Jason. She was doing like energy credits and like just tradable energy credits. So that was that. Coming back from that, it was pretty good. I was the least qualified person in that panel. Let's put it that way.
That's how you want it to be, right? The dumbest person in the room.
What was proof of talk? I got like 7 different like X outreaches about this, and it looked like a crazy set of people went.
Yeah, they put together this pretty, like, it was in the Louvre, like beautiful conference venue, and these guys have been running it for 3 years, and it's just great setup, great venue. A lot of really, like, the co-founder of Tether was there. You know, Barry Silbert was there, Balaji was there. Like, it was a pretty stacked set of people, and I was like, why haven't I been to this one over the last 2 years? But really insightful conversations, honestly.
One thing I think on everyone's mind is like these MicroStrategy for X public entities, or I think people have called them DATs also, digital asset treasury accumulation vehicles. But on X, Nick G at Breed VC put together a great report on this. So there's 199 entities that collectively hold 3 million Bitcoin. So it's like about $300 billion worth and 1/7 of the total supply. And these numbers are obviously rapidly accelerating. That's for Bitcoin specifically. I want to start with Mahesh here because I know you guys have done one investment in this space with XTAL, but what do you think of the trend as a whole? Like, is this a new paradigm that we're seeing where like crypto and Wall Street are merging together, or is this kind of like a blow off top? People are extracting as much value and capital from the space as they can. Like, what do you think's going on here?
Yeah, I think it's an interesting situation overall, because I don't think there's ever been like this kind of an environment where people are just doing crazy irrational things on the stock market. Like the reason crypto has been crazy for the last like 10 years is like people do crazy irrational non-market things there, and it doesn't always necessarily flow back directly to the stock market. But with all these vehicles, it's crazy because the arbitrage seems like it's getting bigger over time, where like you can start a vehicle, try to do something crypto related, and like the excitement's growing. So I'm like long-term not super bullish on these kinds of things because I think they kind of are anomalies. But I think short-term, it's going to be super interesting because there's just so much of the world that like doesn't even know how to touch crypto, and then just like gets, brought in by a friend or a cousin or something like that into one of these kinds of things, and then they make money. And once you've made money, you're kind of just continuing to go. It's kind of what happened in the last alt cycle, where you had people trading all sorts of garbage and they didn't even know what the garbage was, but what they knew is that it was moving. But it just doesn't feel super efficient. Santi, I don't know how you feel about this, because I know you're a studier of efficient markets.
Well, as much as I like to study them, I also appreciate the irrationality of them. we know how this ends. Like I was on a podcast with Rob and Diego last week, and no different than the Bitwise premium. Like you just knew how that was going to unwind. Now I will say I was really skeptical on the MicroStrategy premium holding up. Once you had an ETF, the premium was held up. Then you could have said, well, forget about the ETF. As soon as you have options, people are going to be able to express leverage on the underlying in an efficient way, and the premium still holds. And you could argue there's two things that I attribute to them. One, Saylor is just a very unique character. Not everyone. There's only one Michael Saylor.
Yeah.
There's not 10 of them. And then the other one is MicroStrategy has done well is, like doing this recursive leverage and like and having the weight and the ability to negotiate terms so that the debt instrument underlying leverage is more favorable than how a normal person could do it. And I guess like the other point is people can chill corporate stocks. They can't chill like tokens per se. And so that's the other component here. But no, listen, I've done, what is it, Upexi, the Sol one, which is probably the largest. I've been interacting, like my former home, Parify, has done a ton of these. I don't have an opinion. I don't have time, to invest. The question here is, Jason, I'd be curious to get your perspective. Is there a strategy or an angle here for DePIN projects? Because to do something in the public markets, and I was talking to Austin offline yesterday. You know, these are infrastructure projects you can tokenize. I don't know, like, have you thought about the public market play for DePIN projects? And hey, could Helium go public? Helium MVNO.
I think that is quite interesting. You know, it's funny, these vehicles, right, are almost like TradFi speedrunning the Olympus experiment. Like everybody owes Zeus an apology, because these are just straight up like corporate wrappers that trade on exchanges rather than trade on Ethereum mainnet. But you know, I think what's interesting in the MicroStrategy case specifically, Santi, you may know more, but the story I've heard is that, of course, you know, credit funds can only invest in credit. They have a mandate to invest in debt. That means they couldn't access the crypto markets at all, or any beta associated with the crypto markets. They couldn't access Bitcoin. And so Saylor invented basically this loophole where he could sell Bitcoin exposure to credit funds. And he did it in a way that's very elegant by using convertible notes rather than actual like term debt. I'm not really sure how many of these new vehicles are using convertibles versus like some kind of term debt product. And that to me feels like has a lot more of a unwinding structure. And so that would be like my big question as you evaluate these, is how many of them are following this interesting convertible structure where, you know, in a downside case, they just convert into equity versus like actually being called and the entire vehicle being unwound. Of all the assets in crypto, ones that generate significant cash flows that could be wrapped, and then those tokens could be staked and generate some kind of interesting dividend yield, becomes a pretty interesting model for kind of expanding these outside of L1 assets. You know, everyone in CT is calling for the L1 premium to kind of slowly be dying. If that's the case, then assets that are generating cash flows are the ones that will win a significant portion of mind share. And that becomes really interesting, you know, when you have projects like Helium, you know, reportedly doing $50 million of top line revenue, you know, growing faster and faster towards 100 million every day. You know, does the Helium entity itself start to wrap its own tokens and use, you know, like Nova Labs, does it go public and then use its own ability to issue debt or equity to acquire more Helium tokens? Is it a separate entity that does this? Who knows? I think it's pretty interesting. But assets that have cash flows, I think, make for a more interesting opportunity to run this play than ones that are just, you know, XL1 launching a corporate wrapper on a stock exchange.
Maybe, Mahesh, I'm curious if you, not to play your role, Connor, here, but like what trades at higher premium, a DePIN, like a treasury public company with DePIN exposure, or like a layer one? Is DePIN going to be able to break the layer one is so easy to understand, like highway rails for the internet? But
100%.
might there be a interesting narrative that DePIN projects can latch onto? Because, you know, people also understand infrastructure fairly well. There are a lot of telco investors. People have made a lot of money on, you know, Mint Mobile and energy. And so might you be able to tap into that crowd?
It's an interesting question. I think, you know, I think about Jason's point a lot around like free cash flows, because on one hand, like you have this whole corpus of traditional investors, which is like hundreds of trillions of dollars that like all they do is they invest in these kinds of free cash flows. But then you have this crypto market that just doesn't even know how to think about it. So you have this like weird phenomenon where like DePIN companies get penalized for going after building business models as opposed to building games. To Jason's point, one of the really interesting things that I'm noticing is that um, I think you made a really good point, Jason, that it's a structural thing around what Michael Saylor had created and the innovation around yield products. And I have all these people that I see all over Twitter shilling this new theory of attention, which is that if you had a good enough promoter who brings attention to a project, the premium should be able to hold over time. I think that's bullshit. And I think over long periods of time, you're right, it's a structural innovation. It's not a people innovation. So I bet a bunch of those will fall apart. On the DePIN side, particularly, yeah, it's hard because until these things start growing like wildfire, you're going to keep getting penalized for the fact that they just don't look as sexy or as crazy or as candidly unintelligible as some of the AI stuff where you can just paint a really high-minded thesis and then someone somewhere or something like that. So I think it's tough for DePIN. I actually think if you have a really good meme, you could probably raise DePIN meme, you would raise a bunch of money around a theme. So Jason, in a funny sort of way, I actually bet you could raise one of these things for something energy related because it's such an interesting thematic idea. And then hopefully in your case, you then have the business model and free cash flow to get the people that came in for the speculation to stay. I just don't see very few people being able to drive that conversion. And, that's candidly where I think the real opportunity is. But I don't know. Have you thought about it at all or even going down this route?
That's certainly not on the radar right now, but let's see what the market does. Let's see what daylight looks like in a year. But I think it's interesting. Again, I think these acquisition vehicles are a lot more interesting if there's cash flows being thrown off the assets than if there aren't. And that's just a pretty firm conviction that I have.
Sir, no one's scared about cash flow the last 10 years post global financial crisis. What is this nonsense you talk about? Cash flows? Never heard of them.
Yeah, unfortunately, that's true.
Well, regardless of whether people care or not, I think DePIN's kind of on the cusp of attaining some real cash flows here. I mean, I think the recent news in terms of Helium and XNet partnering with AT&T as a customer, and then HiveMapper and Nadix signing up Grab and Lyft as customers and partners also. It's the supply side is there, the tier one kind of holy grail customers are there, and there's signed agreements and there's publicity about it. Now it's about really ramping that revenue. I'm curious for Mahesh and Santi, at what point do you think DePIN can say it has product market fit? We're kind of 2/3 of the way there in terms of supply side and customers signed up, but do we need multiple DePINs with 9 figures in revenue? Do we need the token economics really worked out in terms of value accrual? At what point would you feel confident saying to the public DePIN has product market fit and kind of hold up a few protocols as a shining example of that?
Oh, but most certainly has. I was on a panel on Solana's conference Accelerate. I was with Ariel from HiveMapper. I mean, they've mapped
A third of the world's roads.
The world's roads in a year and a half, too, with a fraction of the cost that capital that it would have taken at any centralized corporation. And not to mention the ability to update that in real time, the coordination undertaking that DePIN allows you to do that. I mean, you best believe if you're at Google Maps or if you're at any of the other traditional companies that are doing this, they're looking at that and saying, wow, it's very powerful. So I think I want to make the distinction. You have DePIN networks and then you have companies utilizing DePIN networks. A skeptic might say, well, look at GeoNet as well. It's getting a lot of traction. The use cases for really precise RTK data are going to be very powerful with robotics and agriculture, certainly the case. Mobile, gaming and geo-positioning, super interesting. But I guess the skeptic person would say, no, DePIN still doesn't have that much product market fit because the revenue is not showing up. You look at Trimble, you look at some of the competitors of GeoNet, and it's dude, they have an order or two magnitude more of revenue. But I would say that the networks are very robust, putting aside maybe tokenomics, or maybe in spite of broken tokenomics, the networks have been able to spin up, which is kind of the inverse take, which is no, somehow they royally screwed up the tokenomics, but they still were able to bootstrap the network. And then now you're at a point where large corporations, which is a signal here, Like Ariel, I think tweeted today that they landed another Fortune 500 customer, and he's going to announce it soon.
There's a Fortune 50.
Fortune 50. Jason, from your standpoint, like again, the real metric or the real barometer here is the network producing reliable data that is being utilized and will continue to be utilized by real industry. And I think that very much is true today, and will only continue to be true over the going forward, just because the state of these networks is continuously updated in real time in a more cost-effective manner. So to me, that's what I pay the most attention to.
Well, you brought up a really interesting point, Santi, on the token economics. Do you have this has been all over crypto Twitter, right? Like there's been a lot of hate on the sustainability of DePIN tokenomics, but there's been some praise for things like WorldCoin, where tokens are only issued for net new network growth, not just continuously issued to existing participants. Do you have any kind of general ideas like how these things can be fixed? Obviously, this is a case-by-case basis. It changes depending on the network itself. But do you have any general principles about how people can fix these?
Well, you just said it. And again, Austin, I think it's worth looking at and having Austin on the pod, because the way that they did a node validator sale, the way their tokenomics work is similar to Filecoin's, which is it is not programmatically codified. It is based on contributions to the network. People might forget this, but like every ICO project realized this. Aave, for instance, when we invested in Parify, the big pitch to Aave land at the time was reward only people that are providing value. And for that was staking, right? Synthetics kind of pioneered the model of you have to stake the tokens and effectively go short to be able to create, this like market, derivatives market. And so I think DePIN networks, to me, the usage-based tokenomics or contribution-based tokenomics makes the most amount of sense. And it's actually pretty great. People should go. I think it's a very particular term that Austin uses, but I think that would be the comp. If I were a DePIN project today, I'd be looking at how Layer 0 is doing it. Now, the point that Austin made was, listen, there's only like 300 validators in the world. So the coordinate, it's actually it's easier to do. So it might not apply to like a Helium, for instance, where you have an order of magnitude more people so like the contribution might be hard to attach to every participant. And maybe Austin could, I don't have a good answer for this. Like, can you do this type of contribution-based tokenomics in a more maybe consumer type DePIN network where you have hundreds of thousands or even millions of nodes contributing data? I don't see why not, but I'm sure someone else has a smarter take that I'm not appreciating.
Yeah, I think on this, I'm pretty sure HiveMapper unlocked token incentives based on like different regions of the world being mapped. So I think they did something similar. I want to shout out at Sergeant Sol, SOL_ on X, because he provided us with a whole DePIN sector update of like the news that had been going on, which we didn't get a chance to fully go through. But we've got Amir here in the lobby, so I'm going to let him in, and then we can talk all about Helium for the next 30 minutes. Amir, welcome to the show.
Thanks for having me.
How are you? So we've been wanting to talk about Helium the past 30 minutes, but we tried to save it for when you jumped on. Would love to just get right into it to maximize the next 30 minutes of our time together, which is, the main, I think, change recently is that you guys posted a huge amount of revenue on the Helium World website. So all the kind of previous estimates were maybe like $400,000 or $500,000 a month. That jumped to $2.7 million a month of revenue. So I want to ask you kind of like, where is that extra revenue coming from? Is it sustainable? And, what was the motivation behind including that new revenue on the website?
Yeah, I think it comes from a few thoughts. One is, I don't think DC burns alone give you like a sense of how big the Helium ecosystem is. It's part of it for sure. And, today, arguably, it is still the sort of main value accrual mechanism. So it's still, it's not like it's not important or anything like that. But the growth of Helium Mobile subscribers. So firstly, the revenue comes from Helium Mobile, right? So the subscriber-facing business. It's a combination of subscribers and hardware and whatever else we're doing, but predominantly it's subscribers. There's some hardware revenue in there, but it's small. And I think for me, at least, it was important for people to get a sense of the fact that Helium Mobile as a service is growing and expanding, and the rate that it is growing and expanding at, because I think that eventually has an impact on deployers and everyone else in the Helium ecosystem. So that was kind of the rationale behind it. Also, we've seen other projects doing kind of similar things where, you look at their sort of off-chain revenue, and including that in the way they sort of report themselves. And then lastly, and I've kind of hinted at this a little bit on Twitter or X or whatever, we want to think now about how to include what is traditionally thought of as off-chain revenue in an on-chain way. And some of that is because now we think the regulatory environment allows that to happen. Like maybe this is how we would have designed Helium from the start, if we could have. And the other is, quite frankly, like now there is meaningful revenue, right? And so it's important to have that conversation now, because you do have this slightly bifurcated environment where you've got equity holders in Nova Labs, and then you've got token holders in the Helium network, and they may or may not have the same goals. And we want to fix that and sort of get everyone rowing in the same direction if they're not already.
Right. Yeah, there's this convergence of public markets and private crypto companies and tokens that's happening right now that I think is really interesting, both on like the massive IPO side of things in terms of Circle, and also these digital asset accumulation vehicles. I mean, Jason had an interesting point earlier, which was like what are the different options maybe for potentially converging like the off-chain revenue and the on-chain revenue for Helium specifically, just like the ideas that are floating out there, right? Like maybe Nova Labs itself could go public, right? Or maybe the equity could somehow be merged like back into the token, and like all of the ecosystem revenues would be accrued to one token. But what are the different ideas or potential options that are on the table for DePINs and Helium in general?
Yeah, I think that is roughly the right way of thinking, or I shouldn't say the right way. It's the way we're thinking about it. You are starting to see this concept of like tokenized equity become a thing again. And it's still tricky, right? Because you need something called an alternative trading system license, an ATS license, in order to be able to trade securities. And I think Coinbase has one, but they haven't been able to do anything with it. And Kraken has one, but they still aren't making securities available to US customers, only international. And so you end up in this kind of weird spot where if you have a tokenized equity that is like a security, not clear exactly where that's going to trade, right? Like a traditional crypto exchange probably doesn't want to touch it. Someone like NASDAQ or NYSE doesn't have a crypto trading sort of practice, so could just kind of live over there, but then you don't get any exposure to crypto that way. And then the other way is similar to what you said, which is maybe you do it backwards, right? Maybe the token buys out the equity, and the company becomes a nonprofit, or we've seen. I think Morpho just did this, which I thought was super interesting and super cool to see. And I think the path they took was to turn the corporation into a PBC, or to a public benefit corp, which is a type of nonprofit, and effectively just retire all the shareholders by giving them tokens. Or I'm not sure exactly what they did, but we would have to think about doing something like that. And then there's questions, okay, well, what does HNT do after that? And so assume you have merged it all together. But that's where we're thinking, though, because we saw some of this in the IoT network, where there was a big difference between what the optimal path for the company to have taken and what the optimal path for the network to have taken would have been. And the simplest example of that would have been, we would have generated $1 billion in revenue if we were just the only hotspot seller. I just think that would have been the slower way for the network to progress. And so we sacrificed earning any revenue basically by allowing third parties to go build all of that. And that was an example of like where the company and the token are at odds with each other, arguably, because we did things there that made the token and the network succeed that were very much at odds with what was best for equity holders, arguably.
Amir, last episode I mentioned that I thought there might be more to learn from Helium's last 12 months than Helium's first 12 months. One thing you hear a lot from entrepreneurs, myself included, is, especially years ago, pre-DePIN, we want to build Helium for X. And everybody was looking to the original IoT model of Helium and how that succeeded so well in the early days. But it seems like, you can tell from the revenue figures, you can tell from massive supply growth, even at the outer years of the token issuance curve, there's all this interesting things happening in the Helium ecosystem over the last 12 months. Do you think that's right? There's more to learn over the last 12 months than the first 12 months. And what are maybe the unique learnings you guys have found in that time period?
It's a really good question. I think, so there's a saying in like startup land that like first time founders focus on the product and second time founders focus on distribution. And I think that's kind of what's happened with Helium now, is that we are much more focused on, shame on me because I'm not a first time founder, but I'm not that smart, so it took me a while to figure it out. But I the distribution is the king, right? Like you see a lot of like, one thing that really irks me in crypto, and maybe we've done too much of this as well, is like, the constant need for announcements and new stuff that's coming, people get trained for like, there's an announcement next week. And really building these kind of businesses, I think, is not that exciting at the end of the day. Like you are just grinding away, optimizing like how you acquire customers, like how do you fill the top of the funnel and how many people drop off, that you reached from actually converting to subscribers or customers or whatever. And so we've spent a lot of time focused in that area, which is arguably less sexy and exciting than like a new consensus protocol or like some other crazy thing, which arguably has very little tangible value. And so we're spending a lot more time there. And I think we have certainly learned a lot. I mean, Helium Mobile has become a pretty big MVNO, but by all accounts, like I think approaching 300,000 signups now. And you learn just a ton in that. Like the amount of stuff that we've had to learn and figure out, and I'm sure others have done this ahead of us. But some of it is unique to the model that we've pursued. But I don't know. I mean, the launch of Helium, I would say for like raw 0 to 1 effect, I doubt you could learn more than from watching Helium in its first year. I mean, both the good and the bad. Though we did plenty wrong. But I don't think you had ever seen anything like that before, where to at least at that rate, versus now it's more like a 1 to 10 operation where it's like, okay, there's an idea and we are now in the refinement stage of it and like trying to figure out how to make it grow and make more money and generate more margin. And and like I said, like arguably that's less exciting than I built this new cool thing, it launches next week, the announcement's coming. I get that, and I think founders like crave that, which is why they always go and found other stuff. But it's also not necessarily how you build a big business. Like there's no silver bullets. It's just a lot of grinding and a lot of lead bullets.
Yeah, I think a lot of that's like when there's a token price that's publicly tradable and live too. It's like you want good news to be coming out all the time, but maybe it shortens your time horizon for getting things out there. I mean, another thing or milestone that you guys hit recently that I think is very significant is 1 million daily active users. So you're a bit off that now, hovering around 900,000 a day, but I'm sure it'll be at 1.5 million in a month or two. What are daily active users for Helium, right? Like how are they interacting with the protocol, the services you're providing, and what service are they buying from you all specifically?
So that metric is how many unique handsets used hotspots on the Helium network. So it's a very precise, or we try to be very precise about what we're measuring there. It's not, website visits or like whatever other, vanity metric. It is literally how many phones connected to hotspots on the Helium network during a 24-hour period. And that could be Helium Mobile subscribers, it could be AT&T subscribers, it could be subscribers from all the other carriers that we're working with. And predominantly, we are using Passpoint there, which if the audience isn't super aware, is the technology that allows automatic authentication onto Wi-Fi networks, so that you don't have to go through, like an aircraft like portal system, where you get logged into a web page or a hotel or whatever. It's much more seamless than that, so people sort of jump in and out of the network. So what you're seeing there in that 1 million DAU is how many unique handsets did that, like join the network. And the reason we're only able to report daily, and why we're also confused when we see other people reporting like monthly or even total numbers, is that the way Android and iOS work now is that they cycle unique identifiers at least every 24 hours. And so the same phone connecting to the network might, over the course of a month might get registered 30, 40, 50, 60 times. You don't really know, honestly. There's no great way of like uniquely tracking them through the journey. But we can say with some certainty that within a 24-hour period, they're unique. But after that, like we're pretty confident that you're starting to see reuse of the same device. And it's not malicious. It's just the way iOS and Android work to try and kind of protect the user's privacy. Because there used to be all kinds of services that would sort of follow you around and use that to sort of identify you. So yeah, so the best we can do is daily. We've seen others with weekly, monthly, whatever. We don't know how those numbers are arrived at. We don't know a way to do that. So we're just sticking with daily. And typically you see it go up on the weekend. So like it's 900,000 or whatever, on a weekday, which would have been incredible to us 6 months ago. But now we would expect to see 1.2 or 1.3 or something going into the weekends, and then hopefully that baseline just keeps growing. And in terms of the last part of your question, like how do they interact with the protocol or the token? For now, that mostly flows through us. Like what ends up happening is that every dollar, every gigabyte that gets consumed on the Helium network gets paid for. And mostly for now, I think pretty much entirely for now, that's flowing through us. So a telco will give us money, we will buy tokens or destroy tokens that we own, and that's how it sort of gets turned back into protocol revenue. So it's very cool, and it's super exciting to see that kind of growth. I think the Helium network is still quite small. I think there's like 97,000 hotspots, which I don't know if that is small. It feels small relative to the IoT days, but it's pretty massive in cellular terms. Mm-hmm. So I think, yeah, it's exciting to see it just, steadily trend upwards. And again, that's one of those like not super exciting things. It just gradually goes up and up and up. And, there's not a big announcement anytime it happens.
Where do you see kind of the most valuable user? I would assume it's coming from the Helium Mobile MVNO. And to that point, like, is there a world where the entire network is just assumed by the Helium MVNO and roaming from other carriers stops, whether it's a density problem or some other reason? Like, is there a reason that you close the ecosystem purely around Helium rather than keeping it open and available for other carriers to roam onto?
I think that's one of those like company versus network sort of dilemmas, right? It's or it could be one of those. My feeling, and I've said this before, and I don't know that people agree with me, but my feeling is that the cost per gigabyte always has to trend towards zero. Like if Helium is even remotely successful in doing what it's doing, like that is what should happen, right? Is that the cost should keep getting driven down. And so it's not clear to me over time how that looks. And so to your point of like how valuable is a user, a typical user session might be 300-400 megabytes, right? And I don't know that at the current rate of 50 cents per gigabyte translates into like a massive revenue number, or that it ever would. So you either need to have an enormous number of those users, or you need a system like that, but also something else. Whereas a Helium Mobile subscriber, I don't want to say specific numbers, but it's double-digit dollars per user, like significantly double-digit ARPU, and that's very different. That's very different from like here's 12 cents or whatever for a session. And so we saw that early on and thought it was important for us to ultimately own the user, because that's where we thought most of the value would live, rather than sort of commoditizing the connectivity, which, while super important and I think allows you to make the most money on the user, I think will happen in lots of different ways, whether that's satellites, whether that's things like Helium, whether that's other technologies that we don't really know about or use yet. But we expect the cost to keep coming down. And I think stuff like Wi-Fi 7 and Passpoint is a good example of that, where I can now have like thousands of users connected to a $100 access point. It doesn't cost me like, $100,000 DAS box anymore or whatever, right? And so that's just going to keep trending in that direction, in my opinion.
And on that point of like owning the end customer relationship, I've seen you guys have recently introduced Cloud Points. They're a big focus inside the Helium mobile app. How have you seen that rollout go? How do you see that interacting with the token down the road? And like, what is the general learnings that you've learned from points and tokens when it comes to DePINs that are touching in customers?
Yeah, the last one I think is probably the one that I think is the most interesting, is that I think when you focus on tokens, you get a very fickle user base, right? Like arguably they're not even there for the product at all. They just don't give a shit, right? Like they just want, and you see Demo actually struggling with this right now, right? Like that they are trying to figure out how to build a sustainable business, and their business has basically been a supply side business, right? Where it's like, here's a dongle, generate data, we'll find a buyer for it somewhere else. maybe they didn't find a buyer for it somewhere else, and now they're trying to figure out how to turn the supply side guys into like actual consumers of the product. But those guys are not interested in consuming the product. They only joined because they're interested in earning tokens. And I think that's great for the supply side of networks. Like you kind of want that capitalist, mercenary kind of mindset almost, because you that's who you want to attract. And I think it attracts a pretty broad audience. But when it comes to like wanting sticky users that have good lifetime value, I don't think it's conducive. It also creates insane gaming vectors and loopholes that are just so difficult to plan through. And so you probably know when we first launched Helium Mobile, users earn crypto directly. And we saw a lot of that, right? Like it was like Groundhog Day all over again from the IoT days, trying to figure out how people were gaming and like spending like 80% of our time trying to shut down gaming. And also, for better or for worse, the vast consumer user base thinks crypto's a scam. Like that's still their general perception. I mean, at least that's our experience when we encountered the general person. They think it's a scam. And so we thought it would be interesting. Okay, what if we, and this I think is Santi's like inversion theory, is like, what if we use what if it's like crypto powered basically, right? But you don't really expose that to the user. Like what you're exposing to the user is actually a product they want to buy in some way that they otherwise couldn't have done it, right? Like in our case, that's a free plan, which is like uniquely enabled by crypto. But the user doesn't really have to know that unless they start digging around of like, okay, well, how do you make it free? And are you selling my data? You do have to explain yourself. But the value proposition is not crypto. The fact it's a value proposition is like, here's a product that you want, and it's uniquely enabled by crypto to give you something that you couldn't get anywhere else. And I think that for us has been much better product market fit, as we've seen in the growth of subscribers, than, buy a phone plan, earn tokens, which gets you 50, 100,000 like crypto people. And then I think you plateau, and then I think it's just really hard after that.
Amir, kind of double clicking on that. If you were to survey a representative number of the Helium base, how many of them do you think really care about the crypto piece? Or like, not so much initially, but like over time? Do they get interested in using wallet functionality and digital money and stable coins and other apps and NFTs? Or have you just like observed that they're like, you're just at feature parity or better on competitive on some traditional dimension relative to a traditional MVNO, and that's okay, and that's fine. Like, I'm curious, like if there are different types of like user journeys and archetypes here that might be relevant as we think about it going in other places or for other DePIN projects.
Certainly the early user base is all crypto, right? And we marketed it that way, or like it was called a crypto carrier, and it was all about earning tokens, and like, so that user base is entirely focused on what's the value of mobile, or what's the value of HNT, how much am I earning for mapping? And like I said, to me, that's actually a terrible kind of user in the long term, because, the mapping reward system is again front loaded, just like every other crypto thing, and sort of leads to disappointment over time, even though you're making money for relatively doing nothing, right? And so I think that early group for sure is crypto heavy. I think from then on, I doubt any of the user base is even crypto adjacent. Like we removed all the wallet functionality for those users, so that the app sort of lives in two modes. There's the sort of crypto mode for the original users on the legacy plans, and then the new wallet, you don't see the new apps, or you don't see wallets or crypto things anywhere, right? Because again, it was confusing to people. Like, what the hell is this address? What is DevNet and what is mainnet, right? Like, what is HNT? And again, it's like, you don't necessarily want to lead them down that path yet. Maybe you do later, but at first you're just like, how do I compete in probably the most competitive market there is? And it turns out that confusing users is not a great way to do that.
I generally think that's like true. Like the user base of crypto is very mercenary and fickle, and like expecting free money constantly. And so I would almost would you agree that the retention curves of a crypto user base is actually like looks much more like is worse than a traditional user that is now joining the Helium, MVNO?
100%. Because the traditional user joined because they want the service, right? And the crypto user joined because they want tokens, right? And when the market goes down, then they're pissed off and they leave. Or, it's just like this airdrop thing kind of got out of control, right? Like people being upset that they only got, thousands of dollars or whatever for, and I know for some people they participated heavily in some of these programs, but yeah, it's a very what have you done for me lately kind of a universe, and that you can use that to your advantage in some cases. But I think for overall, if I have to think of the lifetime value, I'd much rather have someone that joined Helium Mobile because they wanted the service than someone who joined it because they wanted to earn tokens.
Yeah, I think to that point, Amir, I think in the documentation, there's still, token rewards for like location mapping. And I know that for the free plan, you guys require, I believe, locations to be on. So my assumption is that Nova is effectively taking those tokens and basically offering a derivative, which is the cloud points to the end customer, and it's much easier for them to understand. But that has two benefits. Number one, it gives them something more stable to use in the store and whatnot. And it also directs tokens to maybe more institutional holders of the token, just like Bitcoin mining institutionalized over time. So is that kind of, what's happening on these like lower tier free plans? And do you see that as being a benefit for DePINs like down the road? Should they be thinking about, hey, how do we build derivatives and experiences on top of these? To your point, like crypto exists in the back end, and maybe more institutional capital is the one that's coming in and taking those mining rewards.
Yeah, that's exactly how it works. And it was a very conscious decision of like, we're going to hide crypto completely, right? And like just gone. You still have to have it because people are going to ask, well, how is it free? And people are very skeptical. So you have to have an explanation for like how any of this works. But that is exactly correct. And like I said, I think it is net positive. It has been for us. Like, it's been wildly net positive to structure it that way. It's just easier to understand. Like, people know about credit card points, they know about airline miles. Like, this is not a new presentation for them versus a token where, literally would have people like, yesterday I had $8 in my account, now it's $5. Did you guys take $3 away? And so like, you've got to kind of remember that like you're in this place where people are not native with this stuff. They're not used to a currency that like fluctuates in value wildly, right? It's just not, it's not the way they think about money. And so, you end up in this very confused place where people, I think at the end of the day, have a pretty bad user experience, mostly because you've tried to be like too crypto native. For some people, it's totally fine, but that is, I think, a still relatively small cohort. And we haven't really decided what we're doing with the HNT we earn. We haven't done anything with it yet. We haven't been selling it or doing anything. And I think that does become a problem, right? Like, what does treasury management look like? And like, how do you do this? But I think for those DePINs that actually have customer demand, and by customer, I mean like non-speculative crypto capital, whether that's guys like HiveMapper or GeodeNet, or like guys that really have like a commercial user on the other side. I think it's a pretty good model. And I know, HiveMapper is kind of doing some of these things because I sit on their board. I think Geode, I'm not sure exactly how their system works, but I know they actually have like demand from paying customers. At the end of the day, you need demand from paying customers. So that's sort of the end of the story. And I think that gives you flexibility on how you want to structure your tokenomics, but it's a difficult thing to get right for sure.
Well, it's kind of an interesting alignment on the equity and token piece as well, though, right? Because you're not only growing a business that's facilitating structural demand for the token, but you're also a massive accumulator of your own token on your own balance sheet. And you kind of create a significant amount of alignment that way as an accumulator rather than a seller, which we unfortunately see many labs companies, as primarily just sellers of their token. So it actually is a quite interesting model.
Yeah, it's a good point. I should not really thought of it that way in terms of like accidentally aligning the equity and it certainly wasn't planned for whatever it's worth. But yeah, I think it does work that way. And we have been fortunate, but again, also because we're trying to build a real business, that we don't have to sell tokens all the time or really ever to generate cash flow, right? Like, we have been able to go equity fundraise. And again, I think you get the flexibility to do that when you're trying to build a real thing that doesn't just depend on people buying your token. So yeah, and I hope we're able to figure out how to navigate that going forward, or whether the token looks like equity or the equity looks like tokens. I don't know. But it's not something we need to worry about in the short term. So we've got some room to figure out what to do there.
Yeah, Amir, last thing I want to hit on is the mobile plan sign up growth. So we talked about the million daily active users, which is both Helium mobile subscribers, of which there's maybe 300K, and then also AT&T customers from other MNOs. But Helium mobile subscribers specifically, like, what do you think is driving this massive growth? So it's really started to ramp. I think you're doing like 40% month over month growth. adding like 100,000 new subscribers a month, you know, is it paid marketing? Is it the free plan, like lowest tier? Is it the NYC subway campaign? Like what is it word of mouth? Like what's making the mobile plan go viral?
I think the answer is just yes. It's just like, again, it's one of those things where I think finding market fit is a grind, right? Like you're constantly just adjusting everything you do, right? Pricing, messaging, what the app looks like, like who you target, how you target them. I don't think I could point at a thing and say that was the one. So if I had to, it would be the free plan. But the free plan doesn't work either without the rest of it falling into place, because people are highly skeptical, and you need like some level of social proof, and things like the NYC subway campaign that may not turn into a direct, that may not correlate directly with signups, but it may be social proof. It's like, oh, I saw that, and so I saw that somewhere. So like it feels more real to me because I saw it in Times Square or I saw it on a subway. And so it's one of those things that I don't think is very scientific. Like going to market is a little bit more of an art form than I think a science. Otherwise, everyone would be able to just do the same thing over and over again. And a lot of it is just word of mouth, comfort, like, oh, I have a friend who uses that and it's been great. That's all it takes sometimes for someone to like go from like, I've never even thinking about touching that thing to like, it's an easy decision. So all of the things, and a lot of it is nearly all of it is marketing. Again, like the most misunderstood part of crypto and maybe tech in general is like, getting to market, how you market. Products don't sell themselves. Like Apple doesn't spend tens or hundreds of billions of dollars a year marketing, even though everyone knows who they are, for the hell of it, right? Like your products have to be sold. And that takes work, and it's really hard, and doesn't come naturally to engineering types like me who think in binary outcomes, right? Like it's very, very fluffy, right? It's unclear sometimes.
Maybe on that point, Amir, I know we want to wrap, but I'm curious, what has been the most effective form of marketing or marketing campaign that you guys have done just ever?
Ever would probably be the first IoT hotspots on Facebook and Instagram.
That got me into all of this. So
like no one was doing that at the time. Like you had just gotten out of the period of time where Facebook had banned crypto ads. And so like we were one of the first, I think, really back into advertising that way. We were kind of one of the first selling a consumer product, like, here, buy this box. And of course it was like, 99% rejection rate and people saying it was a scam and whatever. But still, in aggregate, it was wildly successful, and I think introduced a lot of people to crypto, period, not just Helium. So if I were to just look back over history, like for sure that. And then now, again, a little bit hard to tell, but like certainly the stuff that we're doing around the free plan, which is very varied. Like some of it's digital, some of it's, live, some of it is, experiential. Like we got all kinds of stuff going on. Difficult to say like what's resonating the most sometimes. But it all seems to be kind of clicking a little bit, and it feels something like having market fit. And the growth is looking pretty good. We're still always playing around with who do we let through the door. So you'll see over the last few days, the sign up rate is down, for example. And a little bit of why is like us experimenting with like, okay, do we want to require government ID to sign up, or should anyone be able to sign up without ID the same way you would be buying a SIM card in a liquor store? So right, and so like we're still sort of experimenting a little bit there. And so when you see the like huge change in numbers, that's oftentimes us playing around with the gates basically to see what different types of users we get in. So yeah, it continues to be a grand experiment and a massive amount of learning, at least for me.
Yeah, marketing attribution is notoriously tough, but I think regardless of where the users are coming and kind of where the growth and success is coming from, you guys are having a ton of it. So, Amir, I want to thank you for coming on and joining us to talk everything Helium. And I want to thank my co-hosts Santi, Jason, and Mahesh as well. Thanks for jumping on, guys. We'll see you next month.